As a business owner and a qualified accountant with many years of experience working with diverse clients in my accounting firm, I've noticed something surprising, that many entrepreneurs, they pour their hearts and soul into building their businesses, but often overlook one critical thing, that is, understanding the types of profit their businesses generate and what they mean. Knowing the difference between gross profit, operating profit, and net profit isn't just accounting jargon. It is the key to unlocking your business financial health and making smarter decisions. So if you've ever wondered, what does my profit really mean and how can I use it to grow? You are in the right place. Now I'm going to break it down in a way that is clear, relatable, and even actionable as a business owner. So by the end of this video, you will understand the 3 money milestones every business owner must know and learn how to use your profit to take your business to the next level. Let's get started. Profit is the lifeblood of any business. Profit is the money that you have left after paying all your business expenses. But did you know that there are 3 types of profit every business owner should understand? And these are your money milestones, and they help you track how your business is performing. I'm going to break this down in a simple and relatable way. But before you make a profit, you know that you must have bought some items, you must have sold them at a price that is more than the cost price. For example, if you bought a piece of item for £10 and you resold it for £15, then you have made a profit of £5. But is £5 actually the profit that you have made? Is it more or is it less? Now we're going to go into that so that you understand better. And the essence of this again is so that when you hold your business financials the next time and you see the breakdown of all of these profits, you are able to understand what each one is calculating and then able to decide how to use these profits to further grow your business. The gross profit. Gross profit is the money left after paying for all the direct costs of making your product or delivering your service. So you've got to think of gross profit as the top line profit. But what exactly goes into the calculation of gross profit? To calculate your gross profit, you will start with your total revenue. This is the total money you've earned from your sales. And then you take out all direct expenses and costs, expenses that are tied to producing your products or getting your service. So let us imagine that you are a baker, you have a bakery and you bake cakes. Your direct expenses might include, number 1, raw materials. This will be the raw ingredients that you use in making your cakes. So I'm talking about flour, sugar, and eggs. 2, you may have labor costs. That is the cost of employing people in the business to work for you. And you as the owner of the business or the director may actually be taking salaries from the business. So any cost that's got to do with salaries or anything that's got to do with employment of the people in the business would normally go under labor cost. Another one is the manufacturing cost. I'm talking about costs like equipment maintenance or packaging. That is the cost of getting the boxes, to put the cakes in so that you can get them delivered to your customers. And also the shipping and freight cost. These are also direct costs because they are the cost of transportation, of getting your baking ingredients into your production office, and also the cost of delivering these cakes when they are done to the customers. So I'm going to give an example quickly so that we understand how all of this cost works. So example, imagine in your bakery in a particular month, you have sold £10,000 worth of cakes. And to make these cakes, you had spent on ingredients £3,000, on labor £500, and also on the packaging, the boxes, you have spent £300, and on the delivery, the shipping and the freight, you had spent £200. So the total cost, the total direct cost is all £4,000. And so the gross profit for that period is going to be the £10,000, that is your sales amount, minus all of this direct cost, that is the £4,000, and you have £6,000 left, which is your gross profit. This is the first milestone on your profit and loss account, and it shows how efficiently you are producing your goods and services. The second type of profit, or the second milestone, is the operating profit. So operating profit is what is left after you've paid for day-to-day running expenses like your rent and utilities. It's a clearer picture of how your business is performing because it includes overhead expenses. So example, and back to the bakery. On top of the £4,000 that was your direct cost, say you also paid £2,000 for rent, you paid £1,000 for advertisement, £500 for electricity, and say £300 for council tax. So the total operating expenses is now £3,800. So your operating profit would not be your gross profit, which is £6,000, less operating expenses, which is £3,800. So the total operating profit will not be £2,200. This is the second milestone on your profit and loss account, and it shows how well you are managing your core business operations. Now we've come to the third one, which is the net profit. It's quite common. Everybody knows about it, and I'm sure you do as well. So this net profit is the final milestone. It is the real bottom line. It is what is left off after all expenses, including taxes and interest, have been paid. This is the money you get to keep or reinvest in your business. So going back to the baker's example, after all direct expenses, operating expenses have been taken out of the business income, the bakery now has 500 tax to pay and also 100 interest to pay. So we're going to adjust for these two expenses in what we already have in the account. So the net profit will now be the operating profit, which is the £2,200, less the 500 tax bill and also the £100 interest bill. So giving us a total of 1,600 as the net profit. So your net profit is the final milestone. This is the money you've truly earned after everything else has been paid. We started off with a gross profit as high as £6,000, then less operating expenses, and these expenses reduced the gross profit to 2,200, which is the operating profit. Then we accounted for taxes and interest. These expenses also further reduced the operating profit to 1,600, which now is the true measure of your profitability in the business. Hey, so now you've paid all expenses, nothing left, but you have 1,006 profit still sitting in the business. So what can you do with this 1,006? I'm going to share 4 smart ways to use it. Number 1, reinvest the 1,006 into your business. Use it to grow your business. For example, you can buy new equipment. You can stock up on inventory. You can launch a marketing campaign to attract more customers. You can hire new staff or train your existing ones. You can upgrade your technology software to work smarter. The second thing you can do with this 1,006, if you are running a limited liability company, you can take part of this money as dividends for yourself as the director. So what you just need to do is make sure that you calculate the tax implication correctly, because you will have to disclose this to the HMRC at the end of the day. Let me tell you, the maximum dividend that you can pay yourself in this tax year is £500. Also, if you have other shareholders in the business, you can give a portion of this money to them as their own dividends, but they will have to report their dividends to the HMRC when they file their self-assessment at the end of the year. Another thing you can use the 1,006 for is to save or invest it. Yes, so you can set up a business emergency fund for unexpected expenses in the business, or you can open a business savings account to earn interest, or you can even save up for the director's pension. So you can open a SIP account and put some of this money or all of it in there if the director does not already have up to £60,000, which is the allowance allowed for the year. So if you don't have up to £60,000 in your SIP account, you can put all of the 1,006 there, and you have no tax liability whatsoever on that, because anything that you save up into your SIP account or into your pension account is tax-free. So another thing you can use this 1,006 for is to pay debts. So you can use it to pay off loans or credit card balances in the business. You can use it to clear lease agreements or other liabilities, because this will save you money on interest and improve your financial health. So before making any decisions, I would like to advise at this point that you speak to an accountant, somebody like me, because that's what I do. So they will help you to optimize your profit while staying compliant with tax laws and regulations. So here you have it. All the 3 money milestones I've explained to you. These are all profits that every business owner must know. So whether you're running a bakery or a tech startup or a freelance gig, understanding your gross profit, your operating profit, even your net profit will help you make smarter financial decisions. So when you hit that final milestone, you will know exactly what to do with your hard-earned cash. If you found this helpful, give this video a thumbs up, and don't forget to subscribe for more tips on growing your business. So let me know in the comments, what is your biggest challenge when it comes to managing profits? See you in the next video.